What's up guys, Alvaro here and welcome to the Bilingual Stock Market channel again. On this channel we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. And in this video I want to break down some technicals, so I want to go over S&P 500, NASDAQ 100 and the Russell 2000 in order to try to figure out what could be potentially happening in the markets next week. And at the end of this video I am going to break down from a technical standpoint as well 5 stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video because we have a lot to cover in this video. So S&P 500, the S&P went up on Friday 0.15% and it closed last Friday's trading session at 4,455 points, 44.55. If we take a look at the relative strength index of the major index of the US, we can see that the RSI is at 56 points, very healthy. That implies that the S&P is neither overbought nor oversold. So I am going to zoom in here on the 4-hour chart. And guys, keep in mind that next week, the markets are going to have to pick a direction without having any sensitive economic data coming out. The next important, very important economic data coming out is going to be the jobs report that is going to come out on October 8th. I think that is going to be not this Friday, but the Friday after that. So the markets are going to have to make up their minds without having any sensitive economic data affecting them. So this is going to be, the upcoming week is going to be very interesting from a technical standpoint. So what's the most important task for the bulls of the S&P 500 next week? Well, that task is going to be taking on 44.75 and at the same time taking on this 50 SMA on the 4-hour chart. 44.75 is a previous area of support and resistance that is coinciding on the 4-hour chart with the 50 SMA. So, and I said this in the video that we posted last Thursday, if the bulls happen to take on 44.73 or 44.75, in my opinion, this is going to be good night iron for the bears. Once the bulls have been able to take on 44.75, they need to make another push higher and try to take on 4,500. On the flip side, what would be the most important task for the bears of the S&P 500? They would have to take on at least, guys, 4,400. By taking on 4,400, they are going to be breaking to the downside, this 180 SMA on the 4-hour chart, and they are going to be back in the game. So watch out for those levels that I just told you about next week. As I just said, 44.75, which is going to be the main task for the bulls of the S&P 500. And let's see if the bears can increase the volume, because that's another aspect that I need to point out, guys. If we take a look at the volume of the S&P 500 from Monday until Friday, the volume was decreasing, guys. So the selling pressure was decreasing at the same time. So the bears need to make the volume of the S&P 500 to increase and at the same time bring this index below 4,400. That is going to be the most important task for the bears of the S&P. And when it comes to the NDX, the NASDAQ 100, I think that the NASDAQ went down a bit on Friday. No, it went up actually 0.09%. It pretty much broke even. And guys, keep something in mind. As of now, we find the NASDAQ 100 at a very healthy spot. We can see the relative strength index at 53 points, but I gotta tell you something over here. Watch out for this, gentlemen. The 10-year Treasury yield. This indicator went up on Thursday and Friday as well. And I think that if we happen to see the 10-year Treasury yield once again above 1.6%, the NASDAQ 100 is very likely to take a hit. Something that caught my eye on last Friday was the fact that the 10-year Treasury yield was going up. You guys know that the 10-year Treasury yield is a inflation indicator, and at the same time Tesla went up $20. That was very weird. Tesla is a very expensive stock, and whenever the 10-year Treasury yield goes up, that is a very negative sign for higher multiple stocks. So the fact that Tesla went up on Friday when the 10-year treasury yield was also rising is a puzzle piece that is on the table. But I truly believe that if we happen to see once again the 10-year treasury yield above 1.6%, most of the higher multiple stocks are going to take a hit, and therefore the NASDAQ 100 is very likely to be affected in a negative way as well. Take a look at what happened back in May. The 10-year treasury yield was trading at 1.68%. That was back on May 12th. And by that time, we had most of the higher multiple stocks under a lot of pressure. Tesla was trading at $520. ARK Invest Innovation ETF was trading below $100. So watch out for the 10-year treasury yield, because in the case of the NASDAQ 100, this is going to be a leading indicator for next week. So in the case of the NDX, this index closed last Friday's trading session at 15,329 points. So what's the most important task next week for the bulls of the NDX? They need to take on 15,380 points. By doing so, they are going to be breaking at the same time to the upside, the 50 SMA on the 4-hour chart, and that might be good night Irene for the bears, unless, and as I just said, we happen to see a huge push higher in the case of the 10-year treasury yield. And in the case of the bears, what do they need to do next week? They need to take on 15,150 points. 15,150 points is a previous area of resistance that already acted as such on 9 occasions for the NDX. It also acted once as support, and on top of that, we are talking about a previous area of support and resistance that is coinciding with the 180 SMA on the 4-hour chart. So in technical terms, everything is crystal clear for the NDX. The bears need to take on 15,150 points to the downside, and in the case of the bulls, they need to burst above 15,390 points each, and they also need to take on this 50 SMA on the 4-hour chart, which, in my opinion, would be good night Irene for the bears. And in the case of the Russell 2000, ticker symbol RUT, the most important task for the bulls of the Russell, guys, would be taking on an area of overhead resistance in which they felt back on September. This was September 1st at 2,310 points each. And take a look, guys, at how, and despite the fact that the Russell went down on Friday 0.49%, the bulls managed to find support at the 180 SMA at the 4-hour chart. This is bullish behavior. So they held as support a major moving average, and let's see if next week they can make a push higher and take on, as I just said, 2,310 points. If the bulls happen to have a phenomenal week, then after having taken on 2,310 points, they would have to make another push higher and maybe make a test to the impossible spot of 2,360 points, which is an area of overhead resistance in which the bulls of the Russell have failed on 1, 2, 3, and 4 occasions since early February. And in the case of the bears, they would have to break to the downside 2,100, let me round this up, 2,160 points. 2,160 points is the lower line of this horizontal channel in which the Russell has been trading since early February. So let's see what happens, guys. I think that, and as I just said when I was breaking down the S&P 500, we are about to see a very interesting week in technical terms, because we don't have any sensitive economic data coming out, and yeah, the technicals are going to decide whether we go up or we go down. We will see what happens. AMC Entertainment, the first stock of this video. AMC pretty much broke even last Friday, going up 0.08%, and it closed last Friday's trading session at $40.01, pretty much $40 even. Okay, so the bulls closed last Friday's trading session slightly below the 180 SMA on the 4-hour chart. That implies that the golden cross that unfolded back on August 26th is officially invalidated. So the most important task for the bulls, I think that the bulls of AMC, or the apes of AMC, need to play defensive next week because they need to prevent the bears of AMC from breaking $38 to the downside. That is going to be very detrimental. That is going to be very negative for the bulls or the apes of AMC. And in the case of the bulls, they need to take on $42. We are talking about a previous area of support from early August and also from early June. And after having taken on $42, after having broken to the upside that area, they have to break to the upside $46. $46 is a previous area of lower support that already acted as such for AMC back on September 9, but it also acted on 2 occasions as support in early June. And we are also talking about a former area of overhead resistance in which the bulls of AMC failed on August 30th. And by taking on this area of overhead resistance at $46, at the same time they are going to be breaking to the upside this 50 SMA on the 4-hour chart. That is going to be very positive for the bulls. So if any of you is interested in taking a short-term trade on AMC, then watch out for $38, guys. I think that if that area, if that level happens to be visited once again, that's a spot in which we can pick up some shares of AMC. In my case, I have 2 covered calls that expired last Friday, so on Monday, tomorrow, I am going to be selling 2 more covered calls, no doubt about it, because the calls, guys, since the implied volatility of AMC is so high, when you are a seller of AMC options, you you are being paid a very good premium. So I think that if AMC happens to pay a visit down to $38, I am going to be selling those. I am going to be selling 2 more covered calls. I ended up making something like, let me see, guys. I can show you one of the covered calls that I sold, and I ended up making like $400 in a matter of a few weeks. So let me see. Let me pull up here the story of AMC. So I think, okay. I also sold a put option. I didn't remember this. So on August 30th, I sold the $54 call, and it was paid $410. And then on September 3rd, I sold a put option that also that already expired, guys, as well. I hadn't noticed this. So I ended up making, by selling options, guys, I ended up making something like $530. So I am going to be probably selling another put option tomorrow if we happen to visit that spot of $38, and I am obviously going to be selling another covered call. I made $400 in a matter of fewer than 30 days, guys. So this is a no-brainer. Selling options in the case of AMC is definitely a no-brainer. And now let's go ahead and take a look at Fubo TV, which is going to be the second stock of this video. Fubo went down on Friday 2%, and it closed last Friday's trading session at $25.42. Also keep in mind that we got unusual options activity on Fubo. So someone loaded up on $28 calls that expire on October 15. So someone is taking a huge bet on Fubo, thinking about Fubo being at $28 or higher than $28 by October 15. Mind you, guys, most of the stocks that I am going to break down in this video, or that I am already breaking down in this video, are higher multiple stocks, are stocks that are trading as of now in the markets based on future earnings and future revenue. So if the 10-year treasury yield happens to keep on going up, all of these stocks are very likely to see lower prices. Keep that in mind. So in the case of Fubo, I think that $25 is a very interesting spot in order to pick up some shares of the stock of this company. $25 has acted as lower support, or acted as lower support for Fubo back on September 21st, but it also acted as support on 3 occasions throughout July and August as well. And we are also talking about a former area of overhead resistance in which the bulls of Fubo failed back on April 9. So if tomorrow I happen to see some sort of consolidation slightly above $25, I am going to be absolutely tempted in order to pick up some shares of Fubo, in which case my price target is going to be the next important area of overhead resistance for Fubo at $28.41. $28.41 is a previous area of overhead resistance in which the stock of this company failed on 2 occasions back in July, but it also failed back on June 2nd. And let me take a look here, guys. So let me zoom in here. Here we have a clear death cross. So you guys can see how the 50 SMA already crossed below this 180 SMA on the 4-hour chart. So watch out for that, guys, because if this death cross puts downward pressure into Fubo TB, what about Fubo breaking $25 and maybe paying a visit to the next important area of support at $20.67? When we say $20.67, we are talking about a former area of support that acted as such back in late May, but it also acted as support back in March and April as well. So watch out for both, guys. The 10-year Treasury yield, which, as I just said, might affect in a negative way most of the higher multiple stocks out there. And watch out for this death cross that might maybe force Fubo, or might, let's say, affect Fubo in a negative way. So this area of lower support at $25 could be broken to the downside, and maybe we could see a flush down, guys, in which case don't rule out Fubo paying a visit down to $20.55. So before picking up some shares of Fubo, I am going to make sure that $25 is providing a good support. So if I pick up some shares of Fubo at $25, then I am going to be selling out of those shares at $28.20 each, in which case I could be making a 12% profit. That would be a very solid profit. So watch out for Fubo, guys. Paying a visit down to $25, finding a good support over there, and then bouncing back up. And the third stock of this video is going to be ChargePoint. And in the case of ChargePoint, guys, someone told me, but I couldn't find any specific information on the internet, that ChargePoint has some warrants that are expiring next week. So we have to keep a close watch on that, because that might put some additional downward pressure to ChargePoint. So ChargePoint went down on Friday 2.93%, and it closed last Friday's trading session at $19.91. And obviously, guys, $19.70 each is a very attractive area in order to pick up some shares of ChargePoint, because we are talking about a former area of support that already acted as such back in early May. It also did it back in late April, also back in late March, and also back in early March. So if I happen to confirm from a technical standpoint that $19.70 is providing a good support, and if and as I just said, guys, if any of you, please give me a hand here. If any of you happens to know about the warrants that are supposedly expiring of ChargePoint next week, please drop a comment down below and let me know, because that implies that if we have, I mean, I don't know what the price of those warrants would be. But if we have warrants expiring at $8 or $9 or $10 or something like that, then obviously whoever owns those warrants is going to feel tempted in order to sell out of those, and by doing so, locking in a nice profit. So we might have, as I just said, additional selling pressure throughout the next week in the case of ChargePoint. So that is something that we need to keep a close watch on. So if I happen to pick up some shares at $19.70, then my price target is going to be the next important area of overhead resistance for ChargePoint, near $23. $23 is a previous area of support that already acted as such for ChargePoint back in early August, and it also did it back in late May. So picking up shares of ChargePoint at $19.70 and selling out of those shares at $22.80, we could be making a 13% profit. This would be a very nice profit. And if we take a look at the relative strength index of ChargePoint, it is at 35 points, very healthy from a technical standpoint. So watch out for those warrants that are supposedly expiring next week, and watch out for the bulls of SharpPoint finding a good support near $19.70 and then bouncing back up. And now let's go ahead and take a look at Enphase Energy. And in the case of Enphase, the stock of this company went down on Friday 2.94%, and it closed last Friday's trading session at $153.66. And guys, I heard a news last week that was related to renewable energy companies. So apparently, one section of the new infrastructure bill implies that most of the renewable energy companies here in the States are going to have tax incentives. They're going to have some sort of tax advantages, right? So, and I have been saying this here on the channel, that we are going to have eventually, maybe not this year, but maybe next year, we're going to have a lot of money coming into these kind of companies, guys. And at the same time, obviously, we're gonna have a lot of money coming into these kind of stocks, such as Enphase Energy. So if Enphase happens to pay a visit, in my case, the price that I am looking for in order to take a trade on Enphase would be $145. $145 is a previous area of support that already acted as such for the stock of this company back on June 14, but we are also talking about a former area of overhead resistance in which the bulls of Enphase felt back on May 27. If I happen to pick up some shares of Enphase near $145, then my price target is going to be the next important area of overhead resistance near $159. $159 is a previous area of support that already acted as such back on August 19, but it also acted as support back on July 19. So we are talking about a former area of support that was broken to the downside and that now is going to act as a new overhead resistance. So if I happen to pick up some shares of Enphase near $145, and if I happen to close this trade the way that I am describing it, or if I happen to be able to take this trade rather the way that I am describing it, selling out of my shares near $159, I could be making an 8% profit. That would be a very solid profit. And if we take a look at the relative strength index of Enphase, it is at 39 points, guys. It is already low. So we can make the case that if Enphase happens to pay a visit down to $145, then the relative strength index is going to be even lower, and that is going to increase the likelihood for the bulls of Enphase to find support at a previous area of support and resistance and then bounce back up. So write it down, guys. $145 is a buy in the case of Enphase Energy. And the last stock of this video is going to be good old Lucid Motors. And keep in mind, guys, that in the case of Lucid, we have an important event taking place tomorrow. So I am going to read the news here for you. So Lucid Group has announced a production preview event that will start on September 27th at its advanced manufacturing plant, AMP1 factory in Casa Grande, Arizona, giving insights into the assembly processes of the company's first electric vehicle. So this event will take a week, guys. I didn't know this, by the way. The week-long event starting on September 27th will be available for media members, policymakers, and a select group of customers to take a look at how Lucid will produce the Air at its state-of-the-art facility in Arizona. So this event is going to take place, it's going to kick off tomorrow, but it's going to take place throughout next week. Wow. So we might expect a very crazy and volatile week for Lucid Motors. So Lucid went up on Friday 0.04%. It pretty much broke even, and it closed last Friday's trading session at $25.43. Sorry. And in the case of Lucid, this was very crazy last week, guys. Let me pull up here the 5-day 15-minute chart. So Lucid went up to $28 from $21, guys, in a matter of only 3 trading sessions. This was a push to the upside of 30%. Jeez. Figure, guys, having invested, let's say, $30,000 on Lucid on Monday pre-market. So can you figure the gains that we would have been able to make? Because Lucid went up almost 30% in only 3 trading sessions. Jeez, I mean, whatever. Hindsight is 2020. So let me pull up here once again the 4-hour chart. And in technical terms, $25 is a very important spot for Lucid. We are talking about a former area of overhead resistance in which the bulls of Lucid failed back in early August, but we are also talking about a former area of overhead resistance in which the bulls of Lucid failed on 2 occasions back in March and also back in April. So we are talking about a former area of overhead resistance that as of now is acting as lower support as expected. So if tomorrow, guys, if I obviously happen to confirm from a technical standpoint that the bulls of Lucid found a good support at $25, that is going to be an interesting spot in order to pick up some shares of the stock of this company, in which case my price target is going to be $28, which is the area in which the bulls of Lucid failed on last Wednesday, but they also failed at $28 back on July 26th and also back on June 7th. A very important previous area of overhead resistance. So picking up shares of Lucid at $25 and selling out of those shares at $28, we could be making an 11% profit. And as I just said, guys, keep in mind that the stock of this company is going to be crazy volatile in the upcoming week because of the event that is going to be taking place in Arizona at its manufacturing facility. And if I zoom in here at the 4-hour chart, we can clearly see a golden cross. You guys can see here the 50 SMA crossing above the 180 SMA on the 4-hour chart. So I think that if the bulls of Lucid happen to be able to keep on holding $25 as lower support, they are going to be off to the races because we are going to have a lot of news coming out from Arizona throughout next week. So watch out for Lucid near $25 per share. And with Lucid, I am going to wrap up the video. Thank you very much for your attention and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours or maybe 5 hours after the market closes. Peace out.